Hey, Dr. Bob Flower, and your Thursday, August 27th, Master Pattern Report 28th, Master Pattern Report. Here we go. Okay, so I had an email from one of our watchers who asked you had made a prediction that the market was going to rally before it nosedived. This was a week, it's 8 days ago or so, and now the market is tanking. This was, I think, last Friday. You know, what's the story? Is it going to rally, or were you off the mark? Well, I certainly. Whether or not it is going to rally, and I think it's doing that this week. The point here that I was trying to make is this, and I've said this a number of times. Knowing the future is not always what it's cranked up to be, and I think I've told this story to a number of you over the years. There have been times, especially in the early years when I was trading soybeans, when I had the exact top of the market, and I played it, and twice I lost money and went to exactly the number that I had projected, and then shot right back down, and I got stopped out at a lower level in which I had bought. So again, knowing the future is not all it's cranked up to be. One of the problems that we have with any model, but especially with our model, is being able to see that there's going to be a major move, but and sometimes we're right in the right time frame. A lot of times we're in the right time frame, but from what level? We don't know that yet. I mean, I wish I did. We would all be multi-billionaires, not millionaires. So what's the story? Well, I'm not backtracking, because I think, as many of you know, if I'm wrong, I'm wrong. I mean, this is a great model, but it's something that's in the works. We still think that the market's going to rally neatly here, and it looks like it's going to get above where it was before, but we're still very pessimistic about what's going on, and we're not liking what October is looking like, as we've been telling you right along. So, let me give you some specifics that I think you can put in your book here. First off, silver. We think silver is going to make a couple of moves here over the next 30 days at least. Up to 1390, the first level. Second level will be at 1445. And then the third level will be 1476. Now, that may all happen in one shot, but those levels are going to be taken out within the next 30 days. As far as the S&P is concerned, we're definitely looking at a move back up to around the 1971 level, and perhaps higher, but we're looking at least that sort of a recovery here. We think the Treasury rates are going to be starting up here, and I think that's already in the move, but I think you're going to see that. And the dollar, we think the dollar is going to take a little bit of a hit here over the next two mid-September, by mid-September, if not sooner. So you can utilize that, mark it down, see how accurate we are. Keep in mind that we are really more of a timing expertise model, and we're always working on trying to get those levels of movements, either up or down, correct. And we do have a new model that we've been working on, which takes our three major mathematical and geometric algorithms and applies them to both price and time. And this is very, very telling and very, very interesting uh, uh, concerning what we're seeing and the results and how it works. I can't use it yet because I don't have enough testing, but it's coming. And being the eternal optimist, this may be the thing that we're all looking for and waiting for. Okay, so what about the economy? What about China? What's going on there? Well, look, we've been saying for 2 years that China's got to tank. It's tanking. I think its real estate is really going to get a lot worse before it gets better. I'm doing some things with the Chinese right now, and I mean, they're not concerned about it really. Some of the investors are, because they're pretty big in real estate, but they're also been smart enough to take a lot of their money and invest it in United States real estate and businesses. But it's still a problem. The euro is still in trouble, and it's not going to get any worse. I mean, they make all the deals they want with Greece and Portugal and Spain and Italy. The fundamentals are not there, and if the fundamentals aren't there, it's just a matter of time. So this correction that we're looking at, it may be a year away, maybe 6 months away, but it's got to come. It's just got to happen. Again, if you ignore fundamentals, you're ignoring the ultimate realities, and that's where we're at now. How is the coming election relating to the economy? Well, a lot of people are starting to realize, or think anyway, that a guy like Trump certainly knows economics, and if there's anybody who's going to bring us financial, if not advancement, security, it's going to be this guy. And I think, if for nothing else, that's a matter that hasn't come to the surface yet insofar as his popularity is concerned. Now, are there others that can do this? Yeah, I think Kasich from Ohio is a good moderate. I think he can do it. I think Scott Walker can do it. And these are guys that have done it in their own states and done it very successfully. Okay, so those are two. But talking about politics, there's something for you to watch. Very interesting how Trump is going after various Republicans, but there are a couple of them he's not going after, and I'm not going to give you any names. You try and figure it out yourself. I think what he's doing is he's building a backstop that would enable him to get out of the race and throw his support to somebody else. And I'm watching this because I think that that's a very real possibility down the road. I don't know if he can sustain this level of popularity without more specifics. And he's working on immigration now, but I think that there are other areas in which he can be very potent, and that is, again, with the economy, which he hasn't even touched, and that could drive him to even further heights of success. Will it work? Well, look, nothing succeeds like success. This guy's had tremendous success. I don't know if his business tactics are going to work with the United States. He talked about Kuwait. I would never have helped Kuwait unless they agreed to giving us 50% of their oil revenues. That's a Dutch model. That goes all the way back to the Dutch Indian back in the 1700s. Their model, and the English model as well, and the Portuguese, as to how they how they gained power and wealth. You know, they went in and they sort of, quote, saved other countries, but took over the country in effect economically, or made them obligated to them economically. So it's a successful model. I don't know if you want to call it the American model, but what is today? These are all changed. Okay, so that's it. I'm off to beautiful Toronto and then Ottawa for a governmental conference up there. And I hope that things do pick up. I think they will, at least temporarily here. But just keep your powder dry and watch out, because these are not happy times, and it's not easy to pick out a sound investment philosophy at this time. So stay in cash. Prepare yourself for the eventualities that are coming down the road. See ya.